All right. Sorry about that. I was trying to get the web version of the other account loaded. So I thought that would be a way to get the other Thinkorswim account going. What a freaking nightmare that was. But got it up and running. So now I can start Thinkorswim again. And we're just going to run the other account from the web. It should still get it done, right? It'll show roles and it'll do everything that we're trying to show. I don't have a trade on it yet. It's a small account, less than $300. We'll find a stock that I can get 100 shares in, and then we'll sell a call on it, or we'll start with selling puts. Maybe run the wheel trade on that. Why not, right? We'll sell a couple puts or sell a put on it, and then when the time comes, we'll end up with stock, and we'll run the other side of the trade and do calls, and then get a call rolled, and that will show rolling with Thinkorswim in a live account, and I'm almost positive that it will not look like that paper roll because that paper roll looks like trash. It looks completely fake. I don't think it is a real representation of a roll at all. So what's going on, everybody? It's Friday. Go get her done. What kind of bird? I don't know. What bird did you see? Where did you see a bird? Maybe somebody threw me the bird. So the account that I was talking about does not have any watch lists or anything like that, because it's on the web. On the computer that I use it on, it's got all of those, but that's not doing us any good. But if you've never seen it before, this is the Thinkorswim web version. It's got the Schwab links and education notifications, blah blah blah. Watch list. It'll do an active trader, time and sales. There's nothing in this account trade wise, so you can see I'm sitting just a little under $300. Couple of watch lists that I started to put together are the sort of things that are active in this environment: aerospace, air defense, automation, battery storage, chips, data centers. That's as far as I got. I didn't get too far, but we'll shop around. I can't get crazy expensive stocks with an account less than $300, but we'll find something. If not, maybe I'll put a little more money in here, and then we'll find something. It's not necessarily a good environment to be shopping around anyways. We're in a big transition period to where maybe we break to the highs and we continue to run to the upside, but uh, don't know. Could see a broader pullback in market structure before we get there. Oh, on my profile pic? I don't know. So at least we solved the problem. Got this up and running. Um, Anybody got any ideas of a stock that meets the qualifications? It needs to have options, and it needs to be less than $250. Yeah, this is Thinkorswim Web, the web version. This is my workaround so that I can have the desktop up with one account and then have the funded account up as well. Because if I log in to this funded account on my desktop, I will lose my workspaces, all of my settings, everything. I made that mistake and I'm not making that mistake again. What I should do is set it up to where both of the accounts have all of the content. But man, it'd take like a whole weekend to rebuild the entire Thinkorswim for a new account. It just sounds exhausting. I was taking a look around at different markets, and I think we might need to roll that Intel call. So I got a January call, $40 on Intel, and that was a roll. Right now, it's a long call held with a $2.50 credit. Isn't that nice? I bought it and then rolled it. So now they're paying me to hold it. It's a trade that can't lose at this point. The worst that could happen is I just make 150 or $250. We'll have to look because I don't remember. But it's a bare minimum profit trade. So absolutely no risk involved in it whatsoever. This is the trade, Intel here, $2.50. So bare minimum, if Intel falls into the trash and, crashes and burns, I'll still make $250 on this call. But as long as Intel continues to perform, this call that I'm holding can make more money. Right now, it's worth $651 if I was to close the trade today. That would just be it right there. And I'm kind of thinking of doing that. Maybe I close that and get the money out and put it in the other account. But I'd rather just roll this thing, kick the can down the road, and see how much more we can get out of it. So you can see right now it says trade price 317. I did not pay 317 for it. It's held as a credit, but that's one of the discrepancies that we see when it comes to getting an options trade and then getting it, is that it can be complicated and you really need to understand how your particular broker does a roll, because this is the sort of stuff that we end up having to deal with. Situations where it says that I paid 317 for this when in reality they paid me now to hold it, and there's no risk to me whatsoever. We've been using Thinkorswim as an example, but I've got 35, 40 accounts. No, 35 or 40 brokers. I've got 80 to 90 accounts, if not over 100. I got a lot, right? And every one of them wants to do it a little bit different. So you have to go in and figure out what that broker is doing when it comes to a roll. The only way I've really found to do that is just to put the trade on and then put a roll on and look at what you got. And when that roll is happening, you'll have a understanding of what it's trying to do for you. On Tasty, it does a really good job of showing you what you're going to get. Now on Thinkorswim, it's showing you what your new position is going to be. That's a completely different thing. The outcome is the same. If you traded this call on Tasty and Thinkorswim on the same day, the same price, and you went to roll it, one's going to show you one price One's going to show you something completely different. But once the trade is actually done and you've got the roll on, your new position will still be the same, but it shows it to you differently. And we need to understand what it's showing so we know what we're going to get when the trade actually happens. Here right now, I just said roll, so it gave me a default roll. I don't want this, but we can see some information already. It wants me to roll this with a debit, so it wants me to pay $87. And even though that says $87, it said that that would make my new position $75. That's still a positive number. So even though it has the word loss in there, its minimum profit would now be $75. I don't want to roll this for a debit. I don't want to spend money to roll anything. So if we adjust things higher or lower, we'll see they want more debit as I go deeper in the money. So let's go the other way. I'm holding a 40. If I was to roll to a 45, now they're offering me a credit of $52. It's not updating this max loss at the moment. Not sure why it's not. Maybe because I have a lot of things open. That's possible. See if we can shut some of this stuff down. CRWV did do really good today. Yeah. That's the live stream. Can't get rid of that. That should help. You know what? Let's see what else we can get. With that. That'll do. What are you? Oh, that's Discord. We don't want to get rid of Discord. Let's stay in the same spot, but roll up to 45. They're offering me a credit of $1.25, and they're still saying my max loss would be 75. We would be adding another $1.25 to the 250 that I've already got. I don't know. We're gonna have to think about that. It's not very much. I think I'll wait for it to get in the money. Yeah, it's topping out the max profit at $78 no matter where I put this. If I go less, it'll go down. But we go up, now it's 44, now it's 78. Anything above 40, it's just staying at 78. So until that updates, I'm not interested in it. A little bit of a goof on Tasty today, I suppose. Still, it's doing good. It's profitable. There's no risk to me, and it's not going to expire for months still. So I say, since it's not offering anything, we'll just let it ride. I don't want to take my 650 and go home yet. I think there's more to Intel. I'd like to see it get up into that 50 area, really, but we might not get that all at once. It might take some time. This is the monthly, and so you can see we've got that risk around 50 bucks. The concern is from a broader perspective, those are very uniform measured moves. And I'm concerned that after this last base, we ran up and then dumped, and then we built a base, and now we're running up, and we could very easily get another leg down. But on a monthly, right? So it's subtle, and maybe the masses aren't catching it. See how that doesn't we're not even done yet. It could run all the way up to here, which is 45, and then fall. Actually, I should have been having it down here. Let's move it a little. That's close enough. It's still pretty close to 45. That would give us a lower high after getting this lower low, and that is the concern at the moment. So I'm watching it. We'll see if it starts to roll over. Remember, the worst thing that happens is I only make 250. This trade can't lose. So kind of get a little confident when it's a trade that you know has no risk. Which is, you know, when it comes to the broker and trying to understand what's going on, keep something in mind. You really want your numbers. Let's do this on real numbers. On that Intel trade, when I first bought this call, I believe we had a vertical to start out with. Yeah, I had the 2025 in a vertical. No, wait, that's a completely different trade. We closed that one out. When I first started this trade, it was just a 30 strike call, and I paid $1.50 for it. No, don't go away. Come back. Stay out here. After I paid $1.50 for it, I rolled it later, and they gave me a credit of $4. And so as long as you're keeping track of the amount of money you paid for the option and then how much money they gave you in the vertical in the roll, then you'll understand what your position is always. This is how I ended up with a long call that is held for a credit of $2.50 because after I paid $1.50 for it and I rolled it for $4, that gave me a new net total of positive 250. So just keep track of your numbers. What I tell people is take a screenshot. That way you don't have to sit there and write down all of the information. Besides, you might not write down something that didn't really seem important at the time, and then later you're thinking, "Oh, I wish I had wrote down the Greeks or the implied volatility or whatever," right? But if you just took a picture, you don't need to worry about it. You got all of it. There's also a box that pops up when you go to get a trade on US brokers. And that box is what their legal statement. It typically tells you where the trade's break even is going to be, and it'll tell you how much money's at risk or how much money you got in credit, whatever. It'll give you those details. Take a picture of that. I had somebody reach out today asking questions about an SPX trade that they took yesterday. It was a 0-day trade, and their strike closed in the money, and yet they were profitable. And they didn't understand why the heck they were profitable. This isn't the trade they took because, well, those options are gone now, but this is an example of what they did. So this is a 6670 66.65 position. It's a call credit spread, and we're collecting 290. The way that most people look at this is they'll say, well, as long as the short leg closes out of the money, then I'm profitable. Yeah, but that's not technically where break even is, right? Break even is not the short leg, it's the short leg plus the credit. So the real break even is 65 plus $3 more. That's 68. We need to be underneath 66.68 for break even. So if I set that at $3 just so it doesn't move, there's break even, and it says it right there in the picture. All I got to do is take a picture of that, and I've got all the information I need. What's the buying power, the cost of the trade, commissions, everything I need to know, including max loss and break even of the stock price. Most brokers are going to give you some form of answer like that. It may not be as detailed as that, but that's what the law tells them to do. If you don't see that pop up, check your settings. You may have already turned it off. For an example, I can turn it off on Thinkorswim and then it won't pop up. Well, that's my fault. I turned it off. Hey, we were talking about robots earlier today. Um, I'm a big fan of Tesla because of the robots that Tesla is building. I think that they are in a position to really outperform a lot of their peers when it comes to robots. I'm not really all that excited about, Tesla trucks or anything. Those things are ugly. Their cars look okay, I guess, but I don't want to rent my power steering, so I'm not really interested in that either. But they seem to have a really good moat around them when it comes to robots. What do y'all think? You got a robot company in mind that you think could outperform Tesla when it comes to robots? We were uh, discussing scanners on Wednesday, and the scans that are on the Bullish Bears website. I tell you, honestly, I hadn't thought about them in so long that kind of forgot they were there. When it comes to scans, you can use stuff that's pre-made, sure, but I think you'll always find it better to use a scan that's custom made to help you reach the goals that you're trying to reach. No, I think that's all right. The having the homemade scans is fine, right? It's nice having something that somebody else built, but these scans, they're never going to match exactly what you need if you don't have it tailored to something very specific. Like maybe you don't like penny stocks, for an example, or you don't want to trade biopharma stocks. So you could weed those out. You could eliminate stocks that are too expensive or stocks that doesn't have really good options. For me, when it comes to using a scanner, I don't want it to give me a bunch of junk that I know I won't trade. I want to get rid of the stuff that I know I won't trade before I even start the scan so that I know the things that it's going to give me are things that I'm interested in having. So the idea would be to put together a scanner yourself, right? Based on what do you have access to. And that can get tricky because we all don't have the same tools. In the past, I have mentioned a company called Swing Trade Bot. Swing Trade Bot is connected to the book Hit and Run Trading, Part 2. So if you've read that book and you thought that was a really good book, then you're probably going to really like Swing Trade Bot. I don't know why it was down there. Let's see if the link works. There it goes. So this site, even without an account, I'm not logged in. I no longer have an account here. You can go in and you can run a scan. Now, because I don't have an account, I can't tweak the settings or adjust the basket of stock that it's going to look in, and I can't run combo scans because I don't have an account. But even with all of that, it's still a fantastic scanner that's free. If you was to spend money and get an account here, it'd be even better, but you don't need one. And the scan is going to tell you what the strategy is for what you want to trade with all the rules that go with it. They're all built into the website. You pick the strategy and it'll run the scan for you. So that's a really good way to go right here. If you don't know what these setups are, read the book. If you want a little bit of a preview, then if we just click on that, here's the preview. There's the rules. It's exactly what you need to find for a trade setup. It'll even tell you where to put your stop. So that's a really good way to go. Longs, shorts, sideways, stalled out markets, whatever you're looking for, there's a whole list of scans right there. And I like that it ties into a book that explains how these strategies were even developed in the first place from the author. So that's one way to go. When it comes to these scans, depending on who made the scan, you might or might not have access to the tool. I know Creed was a real big fan of trade ideas, for an example. The book is called Hit and Run Trading. I've shared the book in this chat, so you should be able to just run a search for it in the chat and find it. And then some of these scanners, I believe, was built by Tim um, using Thinkorswim. I'm pretty sure this UOA was from Tim. I'm almost positive. And the 920, that really feels like a Dan trade. You know, he was always really popular about that 920. So let's just kind of circle through here for a moment. One, I don't trade this way, so I know these aren't mine. And if I did make any of these, it's because somebody asked me to make it, and so I made it. But I don't trade this way. Why would we want high of day scanners? One, for the flip around lunch when we're looking for that reversal. Um, or two, we're looking for things that are running is they're strong and we expect them to stay strong throughout the day. Those stocks that just keep running and running and running all day long. And then when we go out and we do technical analysis on the higher time frame, we may find that it's a part of a bigger run and we could potentially develop that into a swing trade. Finding quote top stocks that are at the high of the day, that's kind of vague. Who's going to define or distinguish what a top stock is? Is that based on market cap? Is that based on liquidity? Because for me, a company or a stock is high quality if it's got a lot of liquidity. Next, behind that liquidity is what sector or industry it belongs to. I would much rather break things down into those sectors and industries rather than just generically speaking, looking at quote all top stocks that are running on the day. Right. So the way to get rid of this scanner and maybe update it into something a little more valuable would be to have your own basket of stocks, put them in a watch list, and then break that watch list into percent. So here's Dow Jones, one of my favorite watch lists, and very easily just going into change percent and looking at what's down and what's up. And things that are down the most and up the most will be on the edges. Well, that's simple enough. And it's a basket of my stocks so that I know exactly the kind of things that are going to show up in it, rather than just any stock out there in the entire universe of 20,000 stocks that might be a China ADR or a Canadian company or some other trash that I don't want to trade. Here, I know every one of these names. They're all blue chip companies, and I can run them by change percent, and we're done. Sorry, Lucian's typing at me. All right, so when we're looking at top stocks that are running, that would be the way to go. It's stocks that you know that are in your tradable basket of stocks, and then they are at the high of day or they are at the low of day or they've advanced a certain amount. If you've got something like TradingView, you can improve this quite a bit. You can probably do it on Thinkorswim. It would just require more adjustments. The adjustments we'd want to make are things like, well, how far has it run? 2%, 5%? Has it pulled back after it made that big run? Those sort of things. And they can be added to Thinkorswim. The, they would just have limitations to it. Why I got to scroll so far to find the link I'm worried about. All right. So that should cover that scan, right? High of day scanner. There's nothing special or unique about this one whatsoever. So you can download the scan or you can watch the tutorial, but my suggestion, build your own with this one. That one is just all right, the bearish version of the 920 cross. When it comes to scanners, one of the first things that I did to better understand scanning when I was new was I would build the thing that it said it was scanning for. And that one, it's a moving average crossover, right? So you would want a 920 on your chart to better understand why are we even interested in a 920 cross. Now, I think in the video they discuss why a 920 cross is important, and really you can use a 921, an 817, 1020. It doesn't have to be exactly what is shown. You can adjust it a little bit, but you don't want to go too low or too high like my 310. That wouldn't fit because those are the wrong numbers. Anywhere from 8 to 11 and from 18 to 22. That's the combo that you want. Generally speaking, if you get a 10-20 cross to the downside, that's a short-term trade. Here's a 10-20 cross right there. It doesn't have to be a long-term downturn. It can just be a short-term crossover. But what I don't want is things that look like this. That's trash. And you're going to get a lot of crossovers in that environment, and that's what I want to avoid. So I want to have a good, clean, solid market that now is having a cross like this right here. After a nice, solid, bullish trend, we had a 10-20 cross to the downside and a really beautiful pullback in a broader market that was trending. Perfect. That's the sort of stuff I want. So when you do bring up that scan, even if you're not doing it on a daily and instead you're doing it on a 5 minute or a 15-minute intraday hourly, you still don't want to find some collection of trash like this spaghetti all tangled up together. Instead, you want to find that it was an established uptrend and now it's broken and it's turning into a downtrend. Now, on the bearish side, a lot of people use options for that. Using stock is really dangerous if you're going to try to short the market. It's dangerous not for me, not for experienced traders, but it's dangerous for newer traders. They don't understand all the risks. So if you are newer to trading and you're thinking about going short in the market, either do it with an option, just buy a put and let the risk of that put be your max loss, or sit out and don't short the stock. Shorting the stock is just going to be a bad idea. There's borrow costs and interest and all kinds of things that go with shorting a stock. And it's just more than a new trader should buy when it comes to, just starting out. Those scanners that are finding the crossover for you, that would be a good way to find actionable stocks in your basket of stocks, right? We're going to keep coming back to that basket because I don't know about you guys, but I don't want to spend 30 minutes weeding through 1,300 stocks trying to find a gold nugget in there, right? I want a small actionable list of stocks. And if none of them have a tradable signal, then screw it. I guess I don't have a tradable opportunity. That is much preferred than, wading through the muck to find a trade and then forcing the issue in some trash that I'm not interested in trading in the first place. But with that basket of stocks, a 10-20 cross to the downside would be a nice way to elevate something to your attention that might be a short term trade. If you can tie that in with news, earnings, headlines, or any other reason that it should be falling, then you can also tie that in with its peer group. Banks, for an example, are having earnings. And if we was to trigger an alert in a bank stock right now with a 10-20 cross to the downside, I could match that financial instrument to its peers and see if they're also a good short or are maybe at least stalled out and not bullish, because I might not want to go short in one name when its peer group is doing the opposite. American Express, for an example, had earnings today. It's doing really good, continuing to push to the upside, but it might have triggered an alert when it was, down here. So you just want to, dig a little deeper than what the alert itself is. But that's not a bad one. And I know Dan loved those 920 crosses. That's the bearish one. This is the bullish one. It would be the same thing. And it is saying daily, right? So you're looking at a daily period 1020 is what I'm going to call it, 1020 cross. And that lines up really well. It's a good alert to focus on, to find a basket of stocks worth trading. But as far as I'm concerned, it's not a trade signal. It's not a trade uh, trigger. That's the word I'm looking for, because I don't play that way. Let's bring up a list of 20 cross, because I think I've got a 20 cross. I think I do. If I had a pinky, my typing might look a little bit better, but I can't find the home row key unless I look down, because that little marker on the home row key that tells you where your finger alignment is, I can't feel that. I'm missing the top of my pointer finger, and I'm missing my pinky. And so I lose track of where my hands are on the home row keys, and then I push buttons that should not be pushed. Wow, I do not have a moving average cross scanner anymore. I know I did at some point, but you know what? Let's make one. Speaking of, this wouldn't be a scanner. It's just a basket of stocks. That's always a really important conversation for me, is what is the thematic group or the basket of stocks that we're trading right now? And there's a list going around on the internet about these companies like OKLO that have a lot of trading volume and a lot of money coming in, but they don't actually have any product, right? They don't have anything. People are just trading them based on hope. Well, they're not making any money because they're not selling you any product. You know what I mean? Like, uh, let me find that list, because that is a really good list right now. Where the hell did that list go? It's even got a real funny title to it too, and it's not my list. If you didn't catch that, it's all over the internet. Dun, 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 dun. Gotta find it. Don't you hate when you're looking for something and you just can't find it? Zero, that's it. The $0 club. That is the one. You don't happen to have the list, do you? Because I do. I just, I gotta find the damn thing. Got it. All right, I'm gonna post it into the chat, and then I will bring it up on the live screen so that you guys can see what it is. I haven't had a time to put it into my list yet, so this is just a picture. Doo, 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 doo. The $0 Club. I think this might be a great tell on risk, right? Like normally we use Bitcoin for that. If they're not willing to take risk in Bitcoin, then they're not willing to take risk in anything. That's the ultimate risk. Um, but right now, these are some high flying fools that aren't even making money, and people are buying them like crazy on hope. So there you go. It's in the chat. You guys can help yourself to it. So we're going to build a scan and remove ETFs. That's the wrong one. So we're just catching the stock. We want a bare minimum of $3. And I really don't care how expensive it is because options will balance that out. Just a reminder, you cannot do indicator scans on Thinkorswim paper. So if you're going to run a scanner, you got to log into your live version. So we've got the daily 9 crossing above 20, exponential on both, in stocks that have penny increment priced options, and we're excluding all ETFs. And we got these 8, I think, 7. There you go. So let's save this. And there we go. Airbnb is on that list. Well, it's forming a TRB, could get back up to 130, but it's in the middle of a range, and I don't like being in the middle of the range for a trade. So I'm going to let that one ride. And I think you're going to find that answer with a lot of them. So here's the problem with a 310 cross, especially on a daily. If it's been chopping sideways, especially, getting that crossover requires that price has already crossed the 20 and moved far enough away that it's bringing the 9 with it. So see how, for an example, American Express, big, massive breakout all the way back up to the previous high. There's your cross, and it's worthless. At this point, the trade is already done. Now, it could have triggered this morning, so maybe it was worth it, but it was also an earnings trade. And I don't know about you, but earnings trades are done a particular way. Bank of America just had earnings. Let's find one that didn't have earnings. There we go. So here's a 10-20 cross, established downtrend, just like we were looking at the bullish one that had a downtrend or a downward cross. This one's a bearish market having a bullish cross. We had to get far enough above both of those moving averages to get this 9 to cross the 20. It got it done, and now we're getting that cross. What's very likely going to happen is that this is going to pull back and establish a higher low and then make an attempt to come up and break that high with a new high. We don't have to rush here. This gets your eyes on the ball, focused on this stock to help solve that question that I see a lot of people struggle with is finding stocks before it makes the move. Well, this is a really good way to find stocks before it makes the move. It has the cross. You had an established market structure that is now changing, and we know that it needs to pull back. Maybe we just hope it's going to pull back, but it should not just be an endless move in a single direction, right? Hopefully it pulls back and establishes itself. To do that, we can start to try to identify, well, where's that pullback going to happen? How far should it pull back? Hey, at least to the moving average. That's a good start. If you're only looking for a day trade, you could focus on the day that it actually gets the breakout. If you see that next day's trading, let's zoom in here a little bit. On the day that you would have gotten the alert right there, this would have been a breakover alert that it broke above the 20 when the 10 was still underneath it. That's the way you would set the alert up. That's a single day's trade. Nice follow through if you wanted to swing it. And now you're getting this one. So be trying to gauge the level of this pullback to the moving average as a bare minimum. Below the moving average, we got the half back. Worst case scenario is we wick underneath the half back and that we get a tradable trigger when it rises back up above the half. That would be the best scenario right there. Get long on the break back above the half. and the target would be back up to the highs with an overshoot into like 110. So that one's not bad. I don't like it where it is, right? We're inside day. We're actually IX10 at this point. So no love on that. But for a potential trade, yeah, I like it. eBay is a great example of trash. This is what I don't want to find. McDonald's looks pretty good, at least this much of it. We are keeping the breakout after 2 days of struggle. We got the 1020 cross. Now we just got to get outside of this reversal bar for a continuation into 316, maybe 318. I like it. And UPS, what another example of trash. Now, you can play the range, but I wouldn't. The range has nothing to do with that moving average, right? Because the moving average has been crossing back and forth. It has no value. You could just play the range because it's a range. Problem is, we're not at the bottom of the range taking a range trade to the top. We're near the top taking a range trade to the top. And that's a bad trade, but that's a target at least. IX10. Yeah. Um, One of the first trade strategies I ever ran across was on Market Gauge, that same place where we talked about Miss Schneider working. And they were running this 20-minute promo on the IX10 scanner. And I thought, well, I need to learn about scanning. Why not? And I watched the video. And what it all comes down to is what is an inside day? So let's just zoom into this over here. Little more. Little more. Ah, it won't do it. All right. We want to focus on this day right here. The next day was completely inside that day. This is an inside day. It didn't even wick out, right? The top was never broken, the bottom was never broken. So this blue day stayed completely inside of this red day, and both of them are very narrow days. It's not much fun to be inside day when you're inside of a really big bar like that, right? Which all of these bars are inside of that. But so what? It's such a big range, it's worthless. What we're looking for is a narrow range with a narrower bar inside of it. That's an inside day. But what happens if it's inside day two, day three, day four, day five, day six? It's IX10. IX stands for inside. 10, I don't know. Maybe they just needed something that sounded good. IX10. So that's what we call it. IX10. It just means that it's an inside day that's lasted for more than one day with the qualification that it's not some big monster wide bar and instead is a narrowly compressed bar or an NR bar is what we like to call them, narrow range bars. IX10. You can get as specific as you want. For an example, I don't care about wicks. If we wick out above and below, so what? But other analysts are very specific about those wicks. And if it has wicked out onto either side, they won't consider it IX10. They'll say, nope, it wicked out above or below. The range was broken. It's no longer IX10. Each their own, right? But narrow range bars and inside days that follow through into multiple days are a compression of market risk. And the markets move from expansion to contraction to expansion to contraction. And we want to find them when they are in contraction because we're looking for the next expansion. So we don't want to find them after they've already moved 6% in the pre market and be like, oh, wow, look, it gapped up 6%. Who the hell cares? I didn't make any money on that. I want to make money on the gap itself. Get in before the move, right? So how do you do that? You find things that haven't moved yet. IX10, narrow range bars, things like that. Yeah, it's the second day or more of being inside day, for sure. Yep. So the first day is the shadow, and then that shadow is cast across multiple days. And what I like about it is when you go back and you look, here's a 1 day. We built the day here, we stayed inside it the next day, and then we expanded. Or here, we built a day, the next day we were inside it and we expanded. Here, we built a day, we stayed inside, and then we expanded. Right? Multiple days, stayed inside, stayed inside, stayed inside, expanded. Didn't work, but you know. So different markets. This is McDonald's. You're not really going to get high flyer days on McDonald's, but yeah, inside days. And the prettier the setup, the better the outcome, right? So if it's this really trashy wiki market that gaps up and down all over the place all the time, that's not really going to give you what you're looking for. You want something that has really beautiful price action and a really clean range. The cleaner the better. That way it gets posted all over social media and everybody's sharing it and talking about it and getting their attention on it. The more the merrier. One thing I like about the IX10 pattern is you don't need a lot of candles, right? Like we can go out to something that looks like this, but then I'm just constantly zooming in and zooming out. And like, gosh, I can't. Just give me one time frame. So, bring it in 40 days. I can see what I need to see, get a short term trade, and move on. All right, a 1330 on the hourly. That's what this one is. And it's the same thing. They're going to work the same way this other one is. You're not going to want the moving averages to be tangled up like spaghetti. You don't want a sideways market. One of the bad things about one of these hourly ones, is how equities look when you bring up an hourly chart. You've got all those issues with the AM, the PM, the gaps, the trash. So we go to Dow Jones. I'll put my chart on an hourly, and I mean, just look at the just this alone is a noisy mess, right? You got to squint to even see the candles at this point. We want 1330. So we'll just click on this, change it to 1330. But again, there's no magic to these numbers. You could use 1125, 1334, right? Feel free to balance it out a little bit. I've always liked 32 personally, if I'm going to use something in the 30s, but whatever, 30 works. So we got 1330. We got an hourly chart. And we would be looking for both approaches because you can do this one bearish and bullish too. You want an established uptrend that is getting a little bit of a crossover or a pullback. They don't last long. If it's been in an established trend, the expectation is that the trend is going to continue. And we're only looking for a narrow pullback. How narrow? That's going to depend on the market that you're trading. Tesla's pullbacks are bigger than Caterpillar's pullbacks, generally speaking. Um, GameStop is going to have, a bigger pullback, or Hood, or whatever, right? Know your market. Generally, if it was the S&P, we'd be looking for a 2 to 5% pullback. But if you're looking at equities, just look back at what it generally has done in the previous pullbacks to have a feel for the kind of pullback you should expect this time. Here was a really good uptrend and a decent pullback. A lot of these, though, the pullback is done by the time the Globex is over. It fell the night before and it crossed back above the next day. Well, that's not helpful. Or taking it from bearish to bullish, there's a nice cross. So if you're trying to find signals of continuation, that bear scanner probably work out pretty good. Bear to bull scan. That can help you find stocks that maybe have been already in an uptrend that are pulled back at the moment, and you're looking for that trend to resume again. Those are the same thing. Now, the UOA, um, if it was Dan, or if it was Tim, I probably have that scan. His was, I believe, focused on puts. But here's a better way to do it. One, you've got the Discord. He didn't have the Discord back then. You do. So one thing that you've already got is the UOA content that we get in these golden sweeps and the trading tick stuff down here, right? Now this isn't giving you every single golden sweep that company is registering. It's only giving you some. There's more. But when you are looking at it, repeat signals are really valuable. Two is good, more than two is even better. So there's a meta, there's a meta. The problem is these are two different strikes. That's a 715 and that's a 720. If you find repeat activity on the same stock, the same strike, the same expiration, like those two on Irene, that's a good signal. And the more signals you get, the better. So here's a 80 strike on Irene for November 21st OPEX, and it's hitting 2.5, 2.7. I bet if we scroll up or down, we'll find even more. The more, the merrier. That's unusual options activity right there. It's UOA action. Let's see what we got going on here. So we got two there with Irene. What else we got? Google, NVIDIA, GLD. Lots of GLD coming in, but it's 85, 87, 87 again, but the other side. Yeah, no more Irenes. Couple NVIDIAs, same strikes, same expiration, 1.4 and then 2.6. That's pretty good. So that's what you're looking for. Repeat activity, CRWB, same expirations. Well, those two are anyways. They moved up for the 160s on that third one. Oh, and read it. There was three large call sweeps for that, and then another one here, and then more here at a different strike. That's a lot of unusual options activity right there. So that can get your attention. And that's a really good way to get UOA action without having to use a scanner. Otherwise, then we come in and we load the scanner. It should have Tim's name in it. Unusual options, Tim, right there. He's looking for a bare minimum of 3,000 options volume with a minimum of 10 days to expiration on the call side only, and bare minimum of 10 open interest on the strike that was traded. And it has 95 things hitting the scanner. Well, it is OPEX, so probably going to trigger a lot of alerts on OPEX. I would tighten this up, really. One, it's going to matter what your basket is. Optionable is good, but weekly's better. Intersect with pennies so that we get the ones that have the best price opportunities. Now we've got 102. We could also tighten this up a little bit. Let's make this 10,000 contracts. And we've got a lot less names. XLE, Tesla, SPY, Silver, NVIDIA, Banks, Halliburton, Gold, Bank of America. Not bad. 10,000 is probably too tight. You'll have to adjust this through the day so that, early in the morning, something isn't going to have a lot of volume. You're going to have to be a little lax. And then as the day goes on, you could tighten the volume up just so that you don't get overwhelmed with too many. Also, when you see the names in there, it's okay to have multiple names showing up, but the way UOA generally works is that they're most of the time they're hitting one strike first, and they'll hit that one strike over and over and over and over and over. Then when that one starts to get way too expensive, they'll start spreading out into different strikes and into different expirations. So it's okay to see the different expirations, but don't get distracted by them. Right? They're still the same hype off the same original first trade. Well, the scan isn't going to update its volume settings. If you set it at 5,000, it's going to stay at 5,000 all day long. My point about adjusting the volume is if it's first thing in the morning at 9:30 and I want to know who's trading options at 9:32, 5,000 might be too much volume at 9:32 in the morning. I might need to knock that down to 3,000 or even 1,000. But as the day goes on, a lot of stocks are going to have 3,000 or 5,000 volume. Me personally, I don't want 44 names. That's not my goal. If your goal is to have 45, 50, 75 names, then yeah, leave it a lot lower. Set it back to 3,000 or whatever it was and leave it there and get yourself 100 names a day. That's not my goal. But scanning is for the person, right? So you want to set it up the way that works for your needs the best. I want quality, not quantity, right? Now, near the end of the day, the best thing about scans is to show you what moved today. So here's what I like to do with a scan near the end of the day. I'm not looking at this point to try to find something that I could chase for a day trade, right? Say 3:30, 3 o'clock. But what I would like to know is what got really good activity today that I could use tomorrow, next week. And so again, 3,000 wouldn't work for me. Instead, I'd want to know what really got hit today. Did I get any 12,000 volume today? What were those names? Right? I would want the ones that had the most volume and nothing else, because those names I would want to go deeper into. I want their news. I want to know why they were running, what sector or industry they belong to. And so again, I'd end up with a high number just so that I could limit all the trash and only see the highest flyers. Bank of America and banks in general and Tesla are the ones that showed up. And so those also would be something that I'd want to dig into. So for me, no matter what, I don't want 3,000 in there. Another good thing is at the end of the month, we had a whole session on this once. Um, we use the basket of stocks called weeklies and penny increments, but monthly options volume, like the entire month's worth of volume. You can go to the CBOE website. Maybe. It might be the OIC or the OCC or the CBOE. I can't remember which one of those, but we did a video on it, did a live stream on it. You can go there and you can download last month's trading volumes for all the stocks. And it's going to come in a spreadsheet. And then you just sort that spreadsheet from high to low, and you grab the top 50 or 100 names on that list, and those top 100 names had the greatest amount of trading volume last month. Now, that's a really good thing to do too. I wouldn't want to do it every day though, right? At the end of August, you get into September, you look back and you grab August's list. And then, you get into October, you look back, you grab September's list. That's not a bad way to go either. Takes a little bit of extra legwork, but you get an active list. And one of the things that's good about it is names that are growing that maybe has never had weekly options, or it's a company that's getting attention and it's turning into something that may be the next inclusion into the S&P for all we know. That would never hit my radar because I'm looking for things that have weeklies and pennies and established presence. So up and comers, they never hit my scans. If you're looking at something that has the greatest amount of volume for last month, you could potentially find some of these new up and coming names that get added to the Nasdaq or the Dow or the S&P as they grow, right? So that's something to consider. Yeah, for a tradable opportunity, but it's on the list of companies that don't even have anything. So is it tradable? Yeah. As long as it has liquidity, I'm willing to trade it. I don't care, right? But it it would not have shown up in my scan until it had that liquidity, right? So does it have weeklies? Yes, check. Does it have, you know, thousands in volume? Yes, check. It would show up on my radar, and it's more expensive than $3. That's pretty much my qualifications. Has weeklies, has liquidity, and is more than $3. Now, what quote liquidity can be measured in different ways. $5 wide spreads on a stock that's less than $200, it's not ideal. Would I trade it? Yeah, I mean, I have before, so I will again. $2.50 wide, that's better. $2.50 on a $200 stock, I can live with that. Then there's the bid ask spread. That is also another sign of liquidity. I don't want to see 30-cent wide bid ask spreads. I certainly don't want to see 70-cent wide bid ask spreads. 70 cents, that's a huge gap. Then look at the volume. Hundreds. I don't want hundreds. I want thousands on each strike that I look at. I want to look at this thing and see a volume profile in the volume structure, right? I wanted something like that. Not a bunch of NAs and not traded and 3 strikes and 8 and 2. Nah, that's not liquid. So if you can find some liquidity in there, maybe on the 0 day you get some trading volume, that looks like a profile. You got open interest in thousands of strikes. Yeah, that's tradable. But you get out here looking for a swing trade. Nope. I'm picky. I'd rather walk away and not take a trade than break all of my standards and my rules to trade trash just to be able to say, "What? I got a trade today." This one is also one that I've done stock and options combined. It was back here when it wasn't doing this, but selling puts to get the stock, run the wheel, that sort of thing. So I like the premise of these scams. I like what they're attempting to do. But building our own scans would be much more valuable if this page had spent 6 or 7 paragraphs describing why you would want to build your own and giving some examples of how to do it and for what purposes. I think that would have a lot more value than just giving somebody a scanner and saying, "Yeah, this is what we use. You should go do it." And yeah, I know it's got the tutorial with it, and that saves a lot of writing, but it just it fails to capture the idea that the scanner should help you do something very specific, and everybody's purpose is different. Let's see what we can find. Having a specific trade trigger makes things a lot easier. There is an evening star reversal on Caterpillar on the daily. That's a really nice trade setup. You could wait for the follow through to see if this is actually going to turn into a solid reversal, but you wait for confirmation, right? That phrase is very true. You pay for confirmation. What that phrase means is, well, where's your stop going to go? The textbooks will tell you to put your stop all the way up there, 545. And if you wait for confirmation, then this would open up on Monday. It would continue to fall lower than this reversal bar's low. And they'd say, yep, it triggered a trade. And then you get in and you're somewhere around 525 with a stop at 545. That's a really big stop. I don't like it. Instead, I'd say get in as soon as you can or sit out and wait to see what happens on Monday. What are we looking to happen on Monday? what I'm looking for in a situation like this with an evening star reversal, which is a really nice pattern, by the way, is hopefully a gap up. That would be fantastic. Catch that midpoint somewhere around like 535, reject off of that so we can get a short off the highs, and then let this thing break below the previous day's low so we can add in on the breakdown, fueling the fire to that trade, aiming for the midpoint of that bar as a good starting point. 535 to 515. Nice trade. That would be my setup. What if we don't get it? Watching it Monday, it comes in and it just gaps down on a Monday. I wouldn't be looking to short that, right? That would not be what I'd want to play. So if it did that, then I'd look for a fake. I'd look for that gap down to turn around and try to run back up, and then I'd be looking for that lower high after that. It kind of had a morning star reversal or evening star reversal. It did. Yeah. That's an example of kind of what we're looking for. Notice how it gapped up that next day and then it fell down. That's exactly what we're talking about. I actually just described that, right? So that it didn't get to the mid, but that would be what we'd be looking for. The next day it gaps up, makes a run for it, fails, comes down, and where does it go? To the moving average. That's the target. Now, if you're looking for it to go the other way around and come back up, that would be more of like a TRB setup. And keep in mind, you can do something to where you're like evening, morning, evening, morning, evening, morning, and just watch price do this. You can. I don't. What I'm looking for is something that had been doing something and now had an evening star reversal because this morning star is right here and I don't want that. I want an evening star way down here after it's been doing this for weeks and then it gives me a morning star and we run it back up. That I would be happy to play. This just rolling over and coming back here, I don't care if that's a morning star textbook perfect on Monday. I wouldn't like it. Right? So patterns need to be where they're supposed to be, I guess is a really good way to say that. I want head and shoulders at the highs. I don't want head and shoulders at the lows. I want inverse head and shoulders at the lows. I don't want them at the highs. And I want morning stars at the bottom of a trend, not on a pullback in a trend. To each their own. Oh, speaking of morning stars, I know a trader that only trades them on the weekly, and they love it. They love it, but they refuse to trade them on anything less than a weekly. I think he said he did monthlies too, but he won't do dailies. He'll only do weeklies and higher. Doesn't have a lot of opportunities, you know what I mean? But he is adamant about the whole weekly thing. So, I mean, it's a really good weekly pattern. Yeah, I mean, we can talk about that anytime, really. But the whole idea of using the fibs to see anything is just start with what the textbook has to offer, right? So the way that you guys have seen me use my fibs before, it's almost always intraday. So we want to start with that logic. Every textbook talks about measuring range, right? And almost exclusively, they'll tell you to go out to a daily chart and set your chart to a 1 year daily. And then they'll tell you to measure it from top to bottom. Why? You know what I mean? Like, why? Why does that have to be the right answer to everything? So, okay, here's a 1 year daily chart, and we could put anything we want in there. American Express, Caterpillar, Bank of America, it doesn't matter. So, okay, we got Bank of America here. I'm on a daily chart. The textbooks are going to tell me to go from top to bottom, and there we go. Well, what are we trying to do with this? When it comes to top or bottom, bottom, top, what they're trying to tell you is where the 100 is. Some trading platforms, doesn't matter if you start here and stop here or the other way around, 100 will always be at the top. If you haven't come across one of those platforms yet, someday you will. And so you can never put 100 at the bottom. Otherwise, what the textbooks are trying to tell you is put 100 in the direction of the trade that you want to go. If you're bullish, 100 should be at top. If you're bearish, 100 should be at the bottom. So if I'm looking for a topside breakout, what I don't want to do is put 100 down here, because now I'm measuring this direction and we're going this direction. Well, that doesn't make any sense. All right. So they're just trying to point you in the direction that your drawing will work. For us, if you're using Think or Swim, the direction you start is where the drawing goes. So I started at the bottom. That's where the drawing went. That's not going to help me. But I can just go in and add the negative numbers. And so now I'm good, right? Because it doesn't matter. Yep, yep. It's not exactly a TRB, but that was a nice move back up here. This is more of a scoop pattern. I would call it a TRB if it had made the whole thing in a single shot, maybe two. Like if this was day one and that was day two, we could have called it a TRB. But it retraced for 2 days. And so it's not a TRB, but it is a nice scoop pattern. Scoop patterns are a pretty good trade to take. But now that we've made this move, now what? This is another one of those that can set you up for next week. We've expanded significantly in just a few days, from 315 all the way up to almost 350. And today, with this really big move on earnings and everything else, there could be a little more gusto from it, right? Because it closed here at 323. And tonight, it's looking like it wants to close here. Let's call it 353 just for some easy math, because it might go up by the end of the day. So 30-point move ish. Now what? Well, on Monday, what I'd like to see is a fake breakout fast failure. That was a breakout that sustained for another day, and then it started to fail and it slowly rolled over. Not exactly the same thing, but a breakout that failed. That's just a breakout that failed. We want a fake breakout fast failure. So we want the whole thing to unravel in a single day. And it kind of looks like this candle here, but it didn't open in the right spot. So see how that candle reversed and it came crashing back down again. That's a fast failure. That's what we want. But we need it to be, where it opens up here and then it runs and then it comes crashing back down, and it gives you that sort of pattern after it opened up at the top. So I'd love to see something start up like that on Monday. And again, if it doesn't gap up on Monday and give us that opportunity, screw it, just move on and who cares? But you could put that one on the watch list for Monday, like, yeah, man, I'm looking for that. Like this reversal back here, big fake breakout to the downside, massive gap down. It opened up, it ran even lower, and then rope a dope and ran right back up again. And sure, I mean, it didn't go far. Maybe what, $7 in 2 days? Not not a great example of one that followed through well, but a nice reversal of the kind that we're talking about. I'd love to see something like that Monday with a gap up. If this thing gaps down on Monday, I'm not so interested in it, because a gap down maybe into the mid, or even just gapping down into something like in that area, adds fuel to the fire for a continuation to the upside. So I don't want to see that. Be careful though, just because it gaps up on Monday does not mean we're going to short it. We want to see it gap up and then on the intraday stall out and see the options and the order flow and everything turn around on it. And preferably some of its cousins with it, right? Like Visa and MasterCard, so that it's not by itself. But just because it gaps up on Monday is not enough. We got to have that stall in there and then the flip. And if you want to wait for confirmation, if it gapped Monday, let it come back down and get inside of this bar. So maybe your short trigger would be that it gets back inside of 348.70. On the intraday, what I'd be looking for is that it gaps up, starts to run, falls back down, maybe bounces off that 344, and you can get it somewhere off of that pullback. Or if you're feeling frisky, try to get it up here somewhere. But that's getting a short while it's running. And there's a phrase, about not shorting stocks that are running into all-time highs and how that's a really bad idea. But we're talking about day trades, not swing trades. You shouldn't try to short stocks that are hitting all-time highs for a swing trade. And you shouldn't try to buy stocks that are hitting new lows in swing trades either. No, this is my style of trading. When the Bullish Bears hired me, they had a very specific goal. They wanted me to develop the next level training library for advanced options statistics. That was all they asked me to do. And when I asked them about the other stuff, it was basically, well, we got a lot of content providers, they'll handle it. You just focus on the high level advanced option stuff, and we'll let the other guys do the intro. Well, I mean, yeah, but it doesn't really feel like they did, or at least it's not my style, so I don't get much out of it, right? Because I don't trade with indicators and I don't use them the way that they trade. I use price action and I focus on risk management and repeatable opportunity and consistency. All right, now we were going to talk about anchored profiles, um, but I had a busy 2 days and I didn't get to drag out that material. Um, I know I can find it. I just didn't get a chance to do it. But if you want to get started on it, you need a platform that gives you a chance to actually anchor a profile, something like Tradeovate or TradingView. So here's TradingView, and it's in the drawings over here. Anchored volume profile. You choose where the anchor starts. So, for an example, if I was just interested in all of this price action before the breakout, I started that in the wrong spot. Then we would start it here and stop it there, and we could just capture that particular area, right? That you choose where it's going to anchor from. On Tradeovate, a lot of times when I use it, I'm only measuring a particular thing, like just this drawback right there. Say I'm watching this for the reversal. I don't know, TradingView doesn't ask me where I want to stop. It just asks me where I want to start. I don't like that. It won't even let me grab it to change the stop. I mean, I should have used Trade of 8, but whatever. We're here. We'll do it. This profile is only capturing that pullback right there. So that if I'm trying to find the reversal here, this is going to help me spot actionable information. Or maybe I'm looking for the reversal and this is telling me, hey, watch out, that area's got a lot of volume and you might not make it back to the top. You're trying to take this reversal and you got a point of control right here. You're not going to make that, right? Well, I mean, maybe you will, but I don't want maybes. I probably wouldn't trade it. So having an anchored profile can help you really dial in where's everybody at and tell it exactly where you want it to be. But this one, I don't like it. It didn't ask where I wanted to stop. Maybe it's the settings automatically defaulting to the right side of the chart. And if I can turn that off, then it'll let us choose a stopping point. But I don't know. I don't like that. On Tradeovate, you get to start and stop where it is. Yeah, see, it asks where do you want to be, left or right? Maybe it's we can do it this way. Someone in the community. Might have better luck. So let's turn that one off. That's not what I want either. I know they have it because I've used it over here. I'll have to find it. But that's your idea. Now I showed it on the intraday, but you can do it on a daily with value too. Because the whole idea is you have a particular area or range and you want to know where's my risk in this range? Where's those previous traders at? And do I have a concern at any particular spot? We were really worried about the midpoint this week, for an example. So we could have measured that big bar and Monday and Tuesday's price to have a really good idea about the midpoint up there, right? So we can anchor things, wherever we want. Some good ones, though, are if you had a massive gap, you might want to start your anchor right there and run it up. If you have a company, say like Apple, and it had earnings and it went from being really bearish to really bullish after that earnings, that might be a really good place to put your anchor too. So the textbooks talk about anchored from a key level, big gap day, big volume day, earnings day, something that fundamentally changed in the company. Put an anchor on it starting at that point to better evaluate the trades that came in since that day happened. I know in the past we've done work on, say, an FOMC week or a QRA week where things really changed in the broader market. And we marked out key levels like the profile of that week and the point of control for that week. And then we carried them forward for months until price went back to that point later on because it became a key level where we had fundamental changes in the market. And we knew if we went back to there, we would likely see a response in the market. That's the one, fixed range. Yes, sir. Thank you. I knew I had done it before. Fixed range volume profile. That's the one you want. So you can start and stop. And that's exactly the one. Yes. When you're intraday trading, at least when I'm intraday trading, I love having that tool. On Tradeovate, it's my go-to. That way you better understand or you can better examine things like the low. Say take this range and now you're trying to flip it over and you can see, hey, what's my risk here? Or tighten it up. But yep, that's the one. It's just helping you better visualize the market participants. So I'm going to try to find that book, or at least the author's name, so that we give credit where credit's due. And I make sure that I touch on all of the key things about where to anchor and why, because it really is just about better understanding the market participants and where they're located, being able to spot them and recognize risk, right? Because that's what it's all about at the end of the day. If you can manage your risk, you can trade anything. Yeah, Brian Shannon is fantastic, but he's the go-to guy for anchored VWAP. So usually when I mention anything anchored, I always bring him up. His book on anchored VWAP covers the same spots, the same locations, earnings, big gaps, high volume, new month, new year, new quarter. Those are all the default go tos on where you could anchor. And I've even got a chart. I bet it needs updated, but I keep a volume anchor. I haven't looked at it in a month, so I bet it's a little behind schedule. I keep it on the S&P and I just add a new month to it as we go. And so it has the whole year's worth of anchored months for the ES. Well, it has been a little bit. Oh, no way. I use fibs on everything. You can fib a 5-minute candle if you want to. The textbooks tell you that you should go out to a 1-year daily and fib it from high to low. I argue that that is complete trash. That it's worthless. When it comes to using a fib or any drawing, we can't use some pre-scripted notion of what my chart's time frame should be and how far the look back is and go from the absolute high to the absolute low, because I'm generally looking for an answer to something, like how deep was that pullback in relation to this price action, or how deep was this pullback in relation to that price action. So I want to measure something that gives me context towards the current market environment. This run was awesome, and this pullback was what is important because it's helping understand what we're doing right now. I don't need any of that stuff back there. I can just ignore that. We turned around on the half. Now, sure, I went from high to low in this context, but if I'm on the intraday, me personally, I don't generally take the highest to the lowest like that. I'll use the body on the highest and the wick on the lowest. Or if I'm looking for a downside move, I'll use the wick on the highest and the body on the lowest. Technically, we could just use high to low and don't even worry about it. And I've proven that that works. But if you can tighten it up, make it a little better, then I want to make it a little better. So I measure what seems relevant to give me information that I'm looking for. Anything is a range. So this daily bar, it would seem silly to measure just that one bar, right? Why not though? Because if I open that daily bar up, I've got a lot of 5-minute candles in there. So technically, measuring one bar isn't measuring one bar, it's fractal. So I can open that up, and here's the range that I just measured. It's in the wrong spot because we did it on the daily like that, but there's my range. I measure yesterday's range like that to look for intraday reversals. It's one of my favorite trades. It's also one of the most profitable trades. So let's use the NASDAQ because we just had one of these this week. Take Wednesday's price action, high to low. There's your 111 reversal right there. I love that trade. And it'd be easier if we measured it out here rather than trying to do it on the intraday with squinting at the candles and all of that. So there's the high, there's the low, put it back on, and there's the reversal. That's exactly what I call it too. Yesterday's 111, because that's what it is. It's measuring all of yesterday and it's reversing at the 111. I love that trade. But you can get the same trade without it being on yesterday's price. It can be an intraday trade that happens to break down or break out a little bit farther than the previous low, like this one. That's the 1, 2, 3, 6 reversal. Perfect. And where did it go? Right back up to the 786. While all of that was unfolding earlier in the day, we would have stopped at that point and looked at the pullback and the run back up, checking to see if it had made it back through half or not. So that would have been another valid measurement. When it was falling and running to the downside, also would have been using the fibs from that low to that high and checking on each stopping point on the way down. It got to the 1, 2, 3, 6. So once we got the OCC, which means opposite candle color, we would update the drawing and look for the next OCC, which we get right there on the 1, 2, 3, 6. Once that candle closed, we'd update it again to there, and then it overshot. Why? Because that's a blow off bottom or a puke out. We're expecting it to reverse after that. And what does it do? It reversed after that with a really big pullback. So we'd let those candles close and we'd run the whole thing down at that point and we'd look for midday reversals. You can run this whole thing with rules to track a trend to each new stopping point to evaluate the reversals on the lows, the whole thing. Well, you never know when price is done going up or down, but take this scenario here. When that big breakout there, it went way farther than it was supposed to go. That was a warning. That's what they call a capitulation low. We don't look at that and say, oh, it overshot my drawing. I must have done something wrong. Nope, you didn't do anything wrong. This is capitulation. So you let it finish, you let that candle close, you get a couple of candles in there that tell you it's not continuing to go lower. And now you know that you're in a pause. It might go lower later today, but it's done going down for now. And then you just bring it down to the end of that run and you wait for a new start. And look at that new start. What did it do? It went right to the 1, 2, 3, 6 again. Now the whole thing started with a breakdown below 1, right? So if we went back to the start of the day, we ran up, we reversed, we can snap that right there. And we can say, oh man, shoot, that was a heck of a reversal. If we happen to break down, where are we going today? If we get new lows, what's the target? 75 is the target. When we got there, we got OCC, just like we're supposed to. Now, let that OCC close and then update the drawing. Now, where are we going? To 22. Let it get there, look for OCC. There's our OCC right there. Let that candle close, update the drawing. Now, where's it going? 49. The problem is, look what it did. And that was the warning right there. Capitulation low. Call timeout, get out of your shorts, and wait. Because usually, if you get something that violent, the next one's going to pop up into like 900, right? And it won't be a long, right? It's just a like a reflexive bounce, but this one didn't do that. It hung out down here, and that still told you, hey, this move is done. Maybe we start up again after lunch, maybe not. Maybe we come back up. Who knows? But that run is done. Call timeout and wait for new information. So after the second, maybe the third candle, you can just go ahead and bring your drawing down. Because what we're asking at that point is, where's the real mid? Because if we do start going back up, the real mid's my target. I need to know where that real mid is. And it got above the 786. That's your long trade with a target of the mid. And then we came and rolled back over. So there's your target back down to the 1236. Once we got down there, you would update the drawing again to that new level, and then you'd see what else you got. Well, before the drop, the only thing we had was this micro range. There wasn't anything to measure, right? We had a micro range and a micro range, and then boom, we popped out of a micro range. So we really didn't have anything to measure at that point. But once it reversed with this really nice 2 bar reversal and it started to fall back down, we at least have something to measure now. It's not a lot of stuff to measure, but we at least got something. And so we can measure that. And we're looking to cross the 786. You could put it at top, at bottom. We're looking to cross the 786, get down to the half, from the half to the low, and from the low into the 1236. And then you start the show. But if you're going to have a trend day, you got to get out of the box, right? And this is the box. Until we had that high and came back even just 1 bar, we didn't have anything to play with. We just had this little micro range. So at 9:35, at 9:42, you ain't got nothing to work with. You want to continue to use Globex price until at least 10, 10:15, so that you have enough candles to work with. Even that wouldn't have helped us out, right? That was our Globex. That wasn't helpful. The only thing that this was telling us is watch out. It's a really tight range. Set out, stand aside, leave it alone, wait for a play. And oh boy, it gave us a play. A really nice one too. So we can use fibs to track a trend that's in play. We can use fibs to mark the breakout failures. And if it exceeds through the breakout failure, then you close your trade that's wrong because it didn't fail and you take the long and then you run it up to the next level. They're pretty awesome that way. If you have a really big bar on the open, you can use the 5-minute bar and run quadrant lines 50, 100, 150, 200, 250, 300, blah, blah, blah. But those are quadrants, not fibs. All right, guys. It's Friday. Let's go get some pizza or something, call it a day. Unless you guys got any questions, let's wrap it up. That could be fun. You could do the old Tim Taylor and soup it up. Did you watch that episode? Oh man, he just imagine putting like a 302 into a riding a lawnmower. Or that guy that put a stake out in the middle of his yard and tied a string to his mower, and so the mower just kept going in a circle and mowed itself. Like Roomba for the yeah. You got one? Yeah.